question. So, first of all, I think we're always looking to attract capital. And what I mean there is we have to be letting people know what we do. If you're in this business to help others, you have to let them know what it is you offer. So, for us, it's about sharing our story, sharing how we help people, how they can invest in commercial apartments without being the landlord themselves, and really helping them understand what to expect.
All right, welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appelman, founder and CEO of Appelman Capital. Today we're joined with John Casmon. John's a real estate entrepreneur who has partnered with busy professionals to invest in over $100 million worth of apartments. John also consults active multifamily investors to help them start or grow their businesses. He hosts the Multifamily Insights podcast, formerly Target Market Insights, and is a co-creator of the Midwest Real Estate Networking Summit. Prior to becoming a full-time investor, John worked at corporate America, overseeing marketing campaigns for General Motors, Nike, and Coors Light. John, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Yeah, absolutely. Listen, it's great to be here. And as you kind of said in my bio, my background is in corporate America. So I spent 15 years working on advertising campaigns, Nike, Coors Light, Mountain Dew, General Motors. And I happened to be at General Motors when we went through bankruptcy. So that was a time where I realized that dream that so many of us are sold, going to college, getting a good job, and working that until retirement age has some flaws in it. And I watched a lot of my peers get let go during that time. And two things happened. One, I felt very empathetic for those folks who were impacted by the job loss. But the second thing was I realized I needed to take more control over my future. So I started to learn more about real estate. I read Rich Dad, Poor Dad some years earlier. And it seemed like a nice idea. Hey, at some point in the future, I'll start investing. It made it go from at some point in the future to how do I do this now? So I started reading everything I could. Again, I'm in Detroit. This is 2009, so it wasn't exactly the ideal time to invest. Although in hindsight, it was a perfect time to invest, but I certainly didn't have the confidence to be invested in Detroit at that time. So I moved to Chicago a couple years later, and that's when I started my investing journey. I ran into one problem over and over and over. I would save up money with my wife and I. We would buy a property, and then we'd be out of money again. So we'd save up more money, we'd buy another property, and we're out of our savings again. So hard to scale a portfolio when you're constantly taking all the money you have, putting it into an investment vehicle. Certainly takes time. But my goal was to insulate myself from financial loss of a job, things like that. And the path I was on was taking a little too long. So learned about, working with other investors. And from there, we started really scaling a portfolio. And today, as you said, we've invested over $125 million worth of apartments, and we work with everyday professionals to invest in real estate.
Yeah, that's an awesome story, and from starting from zero properties to over $100 million, we want to let's go all the way back to your first property, and then how you transpired into apartments. What made you want to get there?
Yeah, so I was always interested in scaling a portfolio, but the truth is, I didn't know how. I remember reading in the ABCs of Real Estate Investing by Kim McElroy. He talked about, hey, your first investment doesn't have to be a house or a duplex; it could be 100 units. And I just thought that was the craziest thing I've ever read in print. Like I was like, this dude is psycho. Like, who has this kind of money? And I just remember almost feeling like so turned off at the ridiculousness of that comment. And what I learned later on was, again, you could actually invest in these larger deals. Certainly not by yourself, but you could do it through kind of a partnership or a syndication approach. So for me, our very first transaction was a 2 unit. It was a deal that we bought it. We lived in one unit. We rented out the other unit. Today on Bigger Pockets, they would call that a house hack. And it was a great strategy for us. We're able to put only 3.5% down. We were able to negotiate some seller credit. So we actually only put like $10,000 down on a 300 some $1,000 home. And it worked out really well for us. We created a ton of equity, was able to get a line of credit on that property, and actually use that line of credit to buy an 8 unit. So that first project was great. And I will tell anyone, if you are brand new, looking to get started, particularly if you're currently a renter, if you're a renter, This is absolutely the way I would push you to get started because you can have that same renter lifestyle and mentality, but own the entire building. Let the other residents pay off your mortgage. Now you're living either rent free or on a really reduced rent level, but you have that equity and you have that ownership.
Yeah, yeah, that's and then you get the big, I'm gonna call them big hits, because if you sell or you use the line of credit, now you can redistribute that back into other properties, or just keep building equity over the years. Take the depreciation, the debt pay down, and the cash flow, and let it keep growing. So that got you to a certain stage in your life, and then you I guess you found apartment complexes. How did you because apartment complexes are they're intimidating. They're huge. There's you don't know how you. No one knows until you actually focus on how to buy them. So what kind of transpired you into getting into apartment complexes?
Well, I had always read about multifamily, right? And multifamily is anything from a 2 unit to, a 500 unit, right? I mean, it really doesn't matter the terminology. Now, certainly there's residential multifamily, which is 2 to 4 units. And then everything 5 units and up is considered commercial multifamily. So a lot of the books I was reading were just multifamily books. So they talked about the same strategies. And, I remember one said, if you can buy a 5 unit, you could buy a 50 unit. So a lot of those things, they sound good in principle, right? In theory, but there's still the application of it. So my point was, or my goal, I bought that 2 unit. We bought a 3 unit building after that. So that was the first project that we actually just self managed and ran as a true investment property. And then we bought that 8 unit. And the 8 unit, I think, was a critical inflection point because it was a commercial property. The lender required us to have a third party management company, which is what I wanted anyway. But at this moment, I was really gearing up to scale. And it was really important for me to start putting in the groundwork to scale this portfolio and scale it as a business and not just my own little, private portfolio, but how do I take this and create a business out of this? I had a lot of friends and family who were interested in what we were doing, asking questions. I would tell them how to do it. And I realized they weren't really interested in doing the work, but they wanted some of the benefits. And that created kind of an opportunity for us because we needed the capital, right? We needed the capital to go out there and buy these properties. We were finding them, we were coming across them. But until I saved, 6 figures in my bank account, we wouldn't even go shopping. So it was kind of this, which comes first type scenario where we weren't looking for deals if we didn't have the money already in the account. So that 8 unit, we had professional management in place. When we were doing that, we really started to invest in how to scale. I hired a mentor. I attended a ton of different events and really started to wrap myself and immerse myself in this commercial multifamily space and scaling this portfolio. The very next deal we did was 192 units. Now, it took a year, right? It took a year of looking and analyzing deals and talking to deals. And the real secret here was we changed our approach. I was really looking for a 20 unit. We bought the 8 unit. In my mind, if I got anywhere between a 12 and a 20 unit, I just wanted one partner. Hey, I'll bring half the money, you bring half the money, we'll do a JV. That's what I was looking for. What I didn't anticipate was that it was going to be much harder to find a 12 to 20 unit where the deal made sense with me giving away half of the profits or close to half of the profits. And I was actually looking almost too small, right? It was almost too small to do that. Or I needed a deal that was more distressed, where it needed a lot more work, where we could create that value down the road. But going larger, well, pretty much when you get into that space, everyone is buying based off of the cash flow returns and the appreciation upside. So the models may be a little bit different, but it's not the same as, again, a 12 unit where one guy might buy it and all the profits are going to their pocket, or they might just be buying it for tax purposes. So going bigger, but then also going with partners. We didn't find this deal. Another group found the deal. We got to know this group over time. And when they came across it, we just had a conversation. And I actually asked them, I said, hey, we've been looking for a deal and haven't been able to find one that fits what we're looking for. I have people in my life that I'm looking to help. And if I can't help them, they're not going to get the help. So I need to be flexible on how we serve them. So if you have an opportunity, I would love to see if maybe there's a way for us to partner. And that kind of led us down a path where we could partner with other investors while still doing our own deals as well.
I think you just hit a key point. Like the circles that you surround yourself with, you've got you're privy to deals that other people just they will never see. They'll never see the transaction being made. And coming in with a deal with John, you've got access to those deals that have better returns than anything you'd find out there on the market, because these are groups, these are operators that need capital. They need a group to come together to take them down, and I say take down to acquire them in order for the business plan to get executed. But you've got access to deals that others just do not, and that's just a part of being in the loop, and being having years of experience like you do, um, and you help other people along the way getting in there. It's very cool.
Yeah.
Um, what would be the best way for somebody out there who's wondering how to get started in apartment investing? How would you suggest that they get started?
Yeah, listen, I think there are three different approaches if you want to get started, and specifically if you want to scale an apartment investing business, right? So the first way is a little bit of a longer, slower way, right? It's kind of the path that I took. Start small and just go a little bit bigger each deal. For me, it was a 2 unit, then a 3 unit, then an 8 unit, then a syndication deal. We were partners, right? So we were a general partner, but we weren't the lead operator. Then the next deal was a larger JV, and then we did a deal where we were the lead operator. So you can certainly take that path. That took us a number of years to scale, but you can certainly take that path. Another route you may want to look at is partnering right away. And there are two different ways to partner. One is going to be through a JV, right? Find a deal. If you have money, if you have experience, find someone who has that thing you're missing, partner up with them and take down those deals together. That's a great way to get started. It's a great way to have somebody who can maybe help you stay both accountable, but also help to maybe be a strength in areas where you otherwise might have a weakness. So that's one way is doing a JV. And the third way, and this is a little different, is I would tell you to look at a syndication deal, because within a syndication, you can invest passively and you can earn while you learn. When you don't have that experience or that knowledge and you're starting out, you just simply don't know what you don't know. So if you can invest with a more experienced group and operator, use that as an opportunity to learn for yourself, put your money to work, but gain real experience. From there, you can now pivot. If you want to stay in a large syndication space, you can pivot to the general partnership side, or you can just break off and now do your own deals. I think one of the scariest ways of going about it is going after a large deal, using all the money you've got saved by yourself with no one else on the team that has experience other than maybe your property manager. The reason is you're going into the deal as the key decision maker with zero experience. It's all of your capital at risk, and you're really setting yourself up for, I don't want to say failure, but you're setting yourself up where you have not put the right people in place to help protect you. And it's not that you want other investors for their money, but they're going to point out things. And one is they're going to point out is, hey man, you need more people around you. I might love you, right? I might really believe in you, but if you're approaching me to do something and you have zero experience and you've never had success there, if they really love you, they're going to tell you, hey man, you need to come back to the drawing board, right? Come back to me when you've got a team that we can believe in. No one's going to hire you to be CEO fresh out of school, right? We want to see you get seasoned a little bit. We want to see people around you who have that experience and you've built a quality team to help you succeed. So that's what it takes in the commercial real estate space. You have to have a team. I don't care who you're thinking of, they all have a team. They have people on the ground, they have acquisition specialists, they have underwriters, they have capital raisers. Everyone has people, even if it's a one person shop, they still have employees that report to them or contractors and vendors. So you want to make sure that you're working with people who are validated, who have the experience, who have the know-how to execute, because that's going to help protect you and all of your investing partners and any other key stakeholder.
Yeah, no, that is huge. And my golden rule is, if I don't know the next five moves on anything, then I need to go around people that do, because ultimately I become the biggest liability in the room. When you're purchasing a property, there's a process to purchasing a property with tenants in it. Although it just nominal giving notices to all the tenants, hanging notices on the doors, to getting the tenants ledgers built in your system. Whether you're operating off of a property management platform or maybe even Excel, but there's still there's a process. And then as far as the team's everything. We have a track record. Now it's a book that we send to the banks, and it goes through where we've been, our all properties, the before, during, and after, the performance, and most of all, the team. Who is the team that you get when you're giving a loan to this company, and that says a lot, because if something happens, then ultimately the team is there to pick up the pieces and make sure that the day still goes on. So it's important to put yourself around people with talent, people with experience, and ultimately that is your success. You can compound off of them. Uh, and you answered that perfectly as far as the team. Team's everything. How would a corporate professional? How would you suggest that they should invest in multifamily? Because they're busy, they've got their own life going on, but they want to get into real estate. Do they just stop doing what they're doing and get into real estate?
I hope not. Listen, uh, real estate can get, be very intriguing, right? When you start reading about it, you're learning about it. It's exciting, And if it's exciting, I want you to, embrace that excitement, but don't throw away everything you're doing to go full in on real estate. I think the best thing any investor can do is just start investing, right? Put your money to work and get some feedback. Invest passively, see how much you like it, see what you don't like. And from there, you can always pivot. If you jump in and you're an active investor, you're responsible for everything. And if you realize that's not really what you want, it's kind of too late. You can't back out of that without selling the asset. So invest passively first, because what's really important for you is to figure out, do you love what real estate can deliver for you, or do you love the process of managing and owning real estate? Most people do not actually love owning real estate. They just love the perks of being a real estate investor. And you have to make that distinction for yourself. Are you comfortable talking to contractors? Are you comfortable taking those, 2 a.m. phone calls from tenants where their units are leaking and they have these issues and going on? Are you comfortable showcasing vacant units and showing them on the weekends? You got to ask yourself, do you really want to do the landlord task, or do you just want the perks that come with it? And be clear, because so many people get interested in being a real estate investor, especially like on bigger pockets and things like that. And they get into it and they realize that this dream and vision of financial freedom and time freedom and all of this great stuff, they don't really have that. What they have is a second job. And if you already have a primary job, most of us do not want to sign up for a second job. So make sure that your investments are actually paying you back, meaning they're paying you back based on the actual money in the investment, not the sweat equity you're putting into it. That's a part time job. You can call it whatever you want to call it. But if you have to work hours to make money, it's a job. So think about it from that standpoint. If you're willing to put in that work, that's fine and great. I had to do it starting out, so completely understand. But if you have money and capital you can put to work, and if that's your true goal, make sure that's at the forefront of your investing philosophy.
Yeah, and I think it's with anything where focus goes, energy flows, and if you want to succeed in your career, you're going to have to focus on your career. If you want to succeed in real estate, focus on real estate. So when you start taking little tidbits of energy and spread it out, it's really nothing succeeds. You're just distributing your time across multiple things that may flounder and just sit there. So if you want to invest in real estate, there's professionals like John who can link you up to great investments, great properties, and then let the team take it from there instead of learning everything all over from scratch. And now your focus just gets dispersed. How are you all finding the best areas for investing? I mean, we've got the continental United States. So there's got the Sun Belt area, which is hot, cold in different areas. Midwest, Florida, everything's got its different challenges, but it's got its upsides too. What are you looking for?
Yeah, it's a great question. So, what we look for is probably a little different from what your audience may look for, but I think it's a great place to start. The first thing is we got to understand what we're looking for at a high level. So, I'm looking for areas where demand is going to grow, right? There's plenty of data points that I'll get into, but ultimately, what I want to know is, will there be more demand in this location in the future than there is today? So then I start to look at the different data points. I'm looking at population growth, right? That's going to be a demand driver. I'm looking at jobs. That's going to be a demand driver. I'm looking at the ease of doing business, right? Is this area business friendly? Or do they have grants? Do they have kind of a commission and committees dedicated to, inviting big businesses and entrepreneurship? Is there infrastructure development taking place in the city or municipality? I'm looking for things like that because I want to see that the city and the locale is committed to growth and not just stagnation. And if they're committed to grow, they're going to help drive more people to come there, right? More population growth, more jobs, all of those things. Then I'm going to look at the multifamily side of it. And I want to take a look at new developments. Is there new construction taking place? Is it landlord friendly? How are rents? Are rents growing or rents stagnant? Like what's going on from a rental income standpoint? So I'm looking at these different factors because that's going to help me get a sense of what I should be projecting in my modeling for these different deals. So I like growing parts of the Midwest and the Southeast region. I live in Cincinnati, so I start with a 2-hour radius around Cincinnati. Think Indianapolis, Columbus, Louisville. Those are markets that I really like. Outside of those markets, we do like markets in the Southeast, like the Carolinas, Atlanta, Georgia. We do like parts of Florida as well. So those are kind of the areas where we play in. So if I were not here in Cincinnati, if I was looking at this, from anywhere USA, I would start with one, am I going to be active or am I going to be passive? Okay. If I'm active, I prefer to have investments in areas that I can get to relatively easily. So again, within a couple hour drive, a short flight. It really depends on you, but I do want to be able to get out there relatively frequently. And then I want to make sure that the area is poised for growth. You know, um, I think the last thing that we didn't hit on, but I do think is very important, is where do you have a competitive advantage? You know, Arizona was the darling for a couple of years, Phoenix in particular. I live in Cincinnati. It's not really easy to get out to Phoenix. There really aren't that many direct flights. There's so many other folks who are out on the West Coast who can compete in that market much better than me, right? But here in Cincinnati, I can drive to Columbus in 90 minutes. I can get to Indianapolis in 2 hours. I can get to Louisville in, a little less than 2 hours. I have a little bit more of a competitive advantage in these markets. So I always like to think of it from that standpoint as well. It's like, yes, I could chase deals wherever, but where can I really hone in on relationships and get a little bit of a competitive edge?
Yeah, that is huge. That's I would add to that right now is property taxes. There are some municipalities,
And
townships,
insurance.
and insurance, and I think the Midwest we've been kind of insulated from insurance costs, and
Yep.
I think we still are. I think that there's ways of hedging insurance on the rise, which I think if you're with the same, I don't want to get an insurance cost, but tax property taxes can be absolutely incredible when there is a sale. Um, and I say that because you might have a property that is within an hour of each other. One property could be, call it 17,000 a year, and the other property jumps up to over $100,000 a year. So you need to watch the millage rates and the percentages because that's got to plug into your underwriting before you make the purchase. If not, you've got to hire consultants and people to help balance out the property, make it make sense. But I think that's one of the biggest things that most gets missed on underwriting. Uh, but it all goes into it for sure. The areas, job growth, population demand. I mean, it is. There's a lot of things to take into consideration. Um, when you've identified a great area, great property, everything's just checking boxes. How do you attract investors and raise capital for that?
Yeah, it's a great question. So, first of all, I think we're always looking to attract capital. And what I mean there is we have to be letting people know what we do. If you're in this business to help others, you have to let them know what it is you offer. So, for us, it's about sharing our story, sharing how we help people, how they can invest in commercial apartments without being the landlord themselves, and really helping them understand what to expect. So, for us, it starts with education, having a conversation with people, showing them what it is that we do, showing our track record, how we've exited 6 deals, how we have an average IRR over 19% on those deals, and how we look to mitigate risk on these opportunities. If someone else is starting out and maybe they don't have that track record, I tell them that there's really 3 C's when it comes to attracting capital. That first C is going to be confidence. Confidence comes from preparation. You got to put in the work. You either have a track record or you have other things you can rely on that help you build that confidence. So for me, on that first deal, before I had a long track record in real estate, I did have some real estate experience, so I could highlight that. But beyond that, I had my corporate experience. I had overseen $100 million advertising budget. I oversaw 7 different agency partners. I was recognized by Black Enterprise is one of the top marketing and advertising professionals in the country. I was recognized, or my team was recognized in Ad Age, which is an industry report, as the fastest growing brand in America when I worked on the Buick team. So I could take those experiences and say, hey, I've done pretty well. I know how to manage teams. I know how to have success. I know how to do business, right? So I can take that as some of those skills are certainly transferable when it comes to this new business. It's real estate, so it's a little bit different, but it's still a business, right? You still have to manage timelines, you still have to manage teams, you still have to budget. So those things are business related. So that confidence comes from the successes I've had, but also the team, right? The team that I put around me. And that leads to our second C, which is credibility. So why would I be credible in this space? Why are you credible in this space? Again, part of that's going to be confidence. That confidence is the outward projection of the credibility, right? I got this team around me. They all looked at the deal. They love it. Look at, what we've been able to do in our own world. You got to have some credibility. If you walk off the street and have never done a real estate deal, it's going to be hard for you to be credible. I don't care how confident you are. And I think that's the key. There's a distinction between confidence and hubris. I'm not talking about this blind hubris where you just believe in yourself and you're going to fake it till you make it. I'm talking about confidence that's rooted in putting in the work, assembling the right team, crossing all those T's, dotting all those I's, and being actually prepared despite not having done it before, right? So that's what I'm talking about when it comes to confidence and credibility. The last C is connections. You have to have relationships, and you may not know those individuals today, but we're always looking to expand our relationships. So if you're making the right connections and sharing what you're doing, those 3 C's set you up to attract capital. So building that confidence, building on your credibility, and building those connections.
Yeah, I think competence equals confidence. So, and that's from even educating yourself, knowing just be the smartest guy in the room about your specific subject matter, and become an expert. To just learn, and then you have to apply, and then take action. You have to ultimately, without action, there's nothing. It's just ink on paper. But competence equals confidence for sure. Um, what's the future hold? How big of a portfolio do you want to get to? You're over $100 million now, so is it a billion, 2 billion?
I don't really think of it from an AUM standpoint, right? Assets under management. I would say I am more thinking about it in regards to relationships and people I want to help. So we definitely want to scale and grow the business and help more people achieve financial freedom or at least some financial flexibility through real estate investing. So we're certainly looking at deals. I won't put a number on the AUM, but we want to scale. We think that there's a lot that we can do to help other people. We want to show them the power of passive real estate investing, and for a number of people, the power of active real estate investing, right? Some of them realize, hey, you know what, that was cool, but I really want to be more involved. I want to have more control. I want to be on that side of the table, and that's great. We want to help those individuals scale as well, and that's why we started doing our education program. So I would say for me, it comes down to I want to do this, for the rest of my life, and maybe at some point that'll change. But I love real estate. I love helping other people learn how real estate can help them and their families. So that's something I expect to do forever. As far as the company structure, I think we always want to stay somewhat fluid there, right? We want to scale and grow. I don't want it to be a massive firm where it's overwhelming and it's full of bureaucracy, but I also want it to be sizable enough where we can put in the different management systems and teams and personnel so that we can enjoy our lives.
Yeah, that's huge, and build something that's generational along the way.
Exactly.
It's good. If somebody wants to learn more about yourself, learn more about your programs or education programs, reach out to you. How can they get a hold of you?
The best thing is to go to our website. We put together a sample deal package for both active investors and passive investors. And it just starts to help you wrap your head around the kind of questions to ask. Now, it's a sample deal, it's not a real investment opportunity. But if you want to get your head around like what kind of things should you be looking for or what kind of things should you include in an offering, it's a great place to start. So you can go to casmoncapital.com/sample deal and you can download that today. And then, like you, we also host a podcast. Our show is called Multifamily Insights, and that podcast is available anywhere you listen to podcasts.
Awesome. John, certainly appreciate you taking time to join us today. And as always, look forward to following you and talking soon.
Absolutely. Hey, Josh, thank you for having me. Great talking to you, and I look forward to staying